Hi, thanks so much for joining in. You're watching Ask Profit on NDTV Profit. My name is Mathew. With me is Mahima, Vachhrajanion, and we'll take you through the next 1 hour of trade. And it's a tough day to trade in the equity markets here in India. Let's take a closer look at where the markets are right now. You have the Nifty 50 that's trading at sub 23,900 levels. And in fact, the close on the Muhurat trading session was in fact significantly higher than that, 24,304. So we've given up 427 points. Believe it or not, we're off the low point of the day, close to about 50 points or so off the low point of the day. At the lowest point, we were down about 2% on the benchmark Nifty 50. And in fact, you're seeing selling across the board. The mid-cap index currently down about 1.6%. The small-cap index, if anything, is off the low point of the day. It was down about 2.2%. It's now down about 1.9% or thereabouts. But it's still deep reds across the board. And we'll try and give you some insight as to what is leading to this. For now, let's take a look at the contribution. Because actually, in today's fall also, you have Reliance Industries that is leading and is contributing quite a bit to the declines. But across the board, you're seeing quite a bit of a crack. In fact, very little green on the screen in terms of the Nifty 50 constituents, most of the stocks in the red, and that is the case for the broader markets as well. In fact, let's pull up the advanced decline ratio, because that will give you a sense of the texture of the market. And there's a very wide gap at this juncture between advances and declines, and led, of course, in a very big way by the declines. All major sectors, in fact, all sectors are currently in the red. And you're seeing the India VIX, which is the only green mark on the screen, it's up as much as 8%. So that should give you a sense as to what the texture is. Now, you're probably wondering what is leading to this. And Mahima, really, apart from a few earnings that have come through and maybe auto sales that are leading to declines for a few two-wheeler companies, which we'll talk about in a bit, it's no real fundamental trigger apart from the fact that there's a significant amount of uncertainty that's emerging from the US presidential election and the Fed. So a lot of uncertainty at the global stage and continued selling by FII. That's the way I'm seeing it.
Absolutely, Alex. And that's the way I think the traders and the investors are also seeing the markets at present. And we're seeing a quite bit of pressure on both the benchmarks as well as the broader markets, but some pockets that are seeing significant movement. Something that I would really like to highlight at this point of time, something like an Azad Engineering, a stock which is completely bucking the trend, where we're seeing broader markets falling as much as 2%. Azad Engineering is up 9%, and this is on the back of it entering into a 5-year pact and an order win of almost 700 crore with Mitsubishi Heavy Industries, and this pact is for power turbine engines, which is why the stock is seeing significant up moves. Some other counters which are buzzing in trade. Let's pull up Zentech. Zentech has seen good revenue growth. Revenue was up 3.6 times for the company. Margins have significantly improved to the 33% mark. It did see slight gains in early trade today. However, it's trading flat right now, down around 0.05%. Let's also pull up some pharma names. They've been in focus. Let's pull up Sun Pharma as well as Dr. Reddy's. The US Direct Court grants preliminary injunction to delay drug launch for Sun Pharma. The stock is under pressure, down around 4%. And DRL is trading flat, down around 0.07%. Lastly, let's also pull up Zomato before we move on to the auto stocks in focus, especially two-wheelers. Zomato is down around 3%, where investee company, that is Adenomo Private Limited, raises additional capital. And this brings down Zomato's shareholding from 19% to 17% overall, which is why the stock is seeing some pressure in trade today, and it's down around 3%. But the stock in focus, as Alex rightly mentioned today, is the two-wheelers pact, and this is on the back of October auto sales, and Puneet is joining us now to give us more details on that. Puneet, a good set of numbers, but stocks are seeing significant pressure. Why is that?
Yes, definitely. I think it's getting corrected because of the larger market downside that we're seeing today. And, mostly I think two-wheelers as well as, tractor makers reported really strong numbers. So let's focus on the two-wheelers first. Hero MotoCorp is the first one, reported roughly 6.7 lakh vehicles, sold to dealers in the month of October. That's, a very strong growth of about 18% compared to the same time last year versus the analyst expectation of about 11 to 12%. Another key thing is that, that Hero might be under pressure today compared to the other players is build-up of inventory over the last 2 months. So in the month of October, they gave to dealers roughly about 6.7 lakh units as mentioned, but retails were about 5.7 lakhs. So that inventory build-up of about 1 lakh is going into November. In the previous month of September as well, there was an inventory of about 1,20,000 vehicles. So going into November, the inventory is significant. Although the company does sell a lot of bikes in a particular month, roughly 3 to 4 lakhs, I think that might be one of the key negatives for Hero specifically, but overall good set of numbers for Hero. When you move on to the other ones, which is TVS Motors, a really steady performance, about 12 to 13% growth over the last 6 months, and that continues in this month as well. Apart from that, the company has also regained its number 2 market share in the electric vehicle space, dethroning Bajaj Auto for the number 2 position. It currently has about 21% odd market share, and with the new lower priced variants such as the iQube, it essentially is looking to have better EBITDA margins in H2 as well. The third one is of course Eicher Motors, another big highest ever sales in one particular month for the company at about 1.1 lakh units. Now that's a growth of about 31% versus growth expectation of 22% by analysts. Now this is the first month of double-digit growth since April, so that's another positive for the company. And finally Bajaj Auto. Now there's a slight negative, domestic sales have fallen 8% for Bajaj Auto for two-wheelers specifically, and that might be one of the key reasons reacting negatively for the stock today. We spoke to the management and they have said that the festive season outlook is looking much better than they had anticipated. Earlier just 1 to 2% growth, and now they're anticipating 6 to 8% growth. But overall, all these players are seeing pressure in the market today, especially because of multiple factors that might not be in hand. But overall, the sales are quite positive for most of these two-wheeler makers.
All right, thanks so much for getting us those details, Puneet. We're joined now by Lancelot Dicuna, who's CIO of ValueX Wealth Connect, as well as Rajesh Palvia, Senior Vice President Tech and Derivative Research at Axis Securities. Thank you so much, gentlemen, for taking the time. Lancelot, I'll come to you in just a bit. Before I do, Rajesh, I'm just wondering, we're going to be talking to a few more people over the course of the show, maybe around 12 o'clock. But just the texture of the derivative space, what are you seeing that is leading to the kind of crack that we're seeing in trade today? And I'm just curious about the way that people are positioning. Some buzz saying that margin calls are getting triggered. There are others that are saying that traders have been light on derivatives heading into a difficult week. What is the view?
Good morning, Alex. So looking at this supply pressure, this is again, very first day. I think it's a very first day for the November series, and the intense supply pressure across the board, and most of the large cap stocks are witnessing the major supply pressure. Looking at the data, I think we have now broken the important immediate put-based concentration of 24,000 level. So I think some unwinding action is now taking place. Yes, margin calls are triggered to be major. Impact is coming on the large cap space. So I think most of the stocks from the derivative side is under supply pressure. But I think if it remains below 24,000 level, I think we may move further lower to 23,700. That's the 50% retracement of entire rally of 21,200 to 26,200. So that level maybe we can see in the next 1 or 2 trading sessions. So 23,700 is the next level where we are focusing. And I think the way market is still not showing any kind of pullback, despite market is in oversold trajectory for near term to short term structure. I think market is sensing something else. There are a lot many caution approaches towards the US election outcome, geopolitical and other things. So I think market is a little sensing something else, and the way market is nervous at this moment, we believe further more supply we could see in next couple of days. So 23,700 and 23,500 could be the next level on the downside. On the higher side, 24,150 is the 24,150 is the immediate supply zone until the stock Nifty not crosses those levels. I think sell on rise would be the strategy for Nifty at this juncture.
Ordinarily, we would have started the queries by now, but I think it's an important day to try and get you to understand the context, because you need to understand what is happening and why things are being sold into before you get into stock specifics. But let's get that very quick fundamental check, Lancelot, on the two-wheeler space. Hopefully you've heard what Puneet had to say based on the latest developments, and a couple of these stocks getting really hammered in trade. Bajaj Auto, Hero MotoCorp, among the top losers on the benchmark, and these stocks have lost 13-14% and 20% over the last 1 month itself.
Yes, Alex, I think, but at the same time, one must not forget that many of these stocks have risen by more than 50% or maybe even 100% over the last 1 year. And there has been this kind of exuberance on the two-wheeler space, and we are now seeing that it is becoming a bit difficult for rural demand is not picking up, and at the same time the kind of growth, even the overall industry growth is only about 3 to 4% max, and it could look at, if it improves, it could go up to about 6%. So while that remains in single digits, and you have this switch to the electric vehicles segment, so you are going to see a little bit of pressure on this space. So when valuations are expensive, one needs to be cautious and avoid getting caught up in the momentum. And I think there may be a further downside, but yes, this space is something which one can accumulate when the valuations become relatively attractive again.
All right. So accumulation, if the valuations become attractive, is Lancelot's view on the entire two-wheelers auto pack. But moving on with the queries for viewers who are just logging in, you can ask all your stock-related queries on the number that's flashing on your screen. I'll quickly pick up the first query. The first query is from Prakash, and he's from Chennai. He's a long-term investor, and he wants to understand and have a view on Galaxy Surfactants. He's been holding this stock for over 3+ years now. He had bought around 70 shares at 2,825 a piece, and he wants to understand whether it's worth waiting going forward as well for the stock or not. Currently his profit stands at roughly 10,000 odd rupees. So Lancelot, I'll come to you for this one. Long-term view for Galaxy Surfactants, should Prakash stay and wait and watch for the stock to perform better, or should he exit?
So I think, long-term point of view, the stock should look reasonably good, because going forward, this space is a space which will grow along with the FMCG space. And while you have seen growth in the personal care as well as the other care slow down a bit, this company should do well over a period of time, and one should remain invested in this stock.
So hold is the view. The next question is on HDFC Life in the life insurance space, and this is a question from Mohit, who's writing in from Ludhiana. He's bought at a price of 599, and he's wondering whether to hold for the next 2 years. Stock is currently trading at 710, above his buy price significantly, so he's in the green and comfortably in the green. Rajesh, on the charts, would you suggest a hold for the next 2 years?
So definitely HDFC Life, if he wants to hold it for long-term perspective, I think he may hold on. Though a market is volatile, so some pressure from the higher level we have already witnessed in this stock. But this stock, we are bullish, and we have already recommended this stock for long-term perspective to our client also, and we are projecting target towards 840 to 860 on a longer-term perspective. So I think as till the stock is holding above 660, 665 zone, I think trend is likely to remain on the bullish side, and possible target towards 800, 850 we could see in the next couple of months. So our view is bullish for HDFC Life. He may hold out the position.
View coming in for HDFC Life. The next question is from Shiva Reddy from Guntur, Andhra Pradesh. He's having Tata Motors at rupees 880, and he has around 500 odd shares of Tata Motors, and he wants to know whether to hold them or sell them at the moment. Rajesh, your view on Tata Motors? The October sales numbers were flat for the company, but overall, how does Tata Motors look to you on the charts?
So this is the fourth consecutive month where we are seeing that Tata Motor is under supply pressure, and now stock has broken all its near-term, short-term moving averages. And looking at the near-term, short-term structure, we believe that until the stock not crosses above 860, 870 zone, sell-on rise would be the strategy. Weakness is there in Tata Motor for near-term to short-term perspective. Maybe in this fall, a stock may correct further, and possible down move can extend to 760, 750 kind of level also. So at this juncture, I would say don't buy at current level, wait for further more correction, and let the stock to settle down at certain level, then only try to buy. the stock, as still trend is looking weak for the stock, and we may see correction in the near term.
Or rather, don't yet deploy for Tata Motors is the call in the technicals. But there's also a long-term fundamental question on Tata Motors from Vinay, who's writing in from Hyderabad. Lancelot, let me take this to you. He's bought at levels of 1,049, so very elevated levels, and he's lost ground from that point, but he's looking to hold for the next 3 to 4 years. He's wondering whether to average his cost price at the current level, which is just above 800 levels. What's the view?
So I think it still is a little expensive if one has to buy it at these levels. But maybe if it does correct, on a further 10 to 15%, then that would be a good level to add. From a 3 to 4 year perspective, they are going to be one of the serious players in the EV space. They have a head start over the other players. They've got a reasonably good market share, and we will see, electric vehicles, move into like vehicles move to electric as opposed to the combustion engine. You have seen, the Uttar Pradesh government is now even considering increasing the road taxes on internal combustion engines vehicles. So I think long term, yes, Tata Motors will perform and will be a good company to hold. But at this point of time, one can wait for another 10 to 15% correction and then buy into it.
All right, so that's the view coming in on Tata Motors. The next question is from Balwant Modi, who's from Rajkot, and he wants to know the entry level for Premier Energies from a long-term perspective. So, Lancelot, I'll stick with you for this one again. Is this the right time to enter Premier Energies?
Unfortunately, I don't track this stock, so I don't have a fundamental view on this company.
All right. Rajesh, then I'll come to you. Do you think that this is the right time to enter Premier Energies as per the chart reading?
If you have enough data.
So it's a recently listed company, and we have very limited data for the stock. But whatever data we have, I think 900 is the down move. If you get any down move towards 900 would be the appropriate level based on the limited data which I have. So 900 would be the level where I would advise to look for this stock if you want to buy in the decline.
Lancelot, I asked Rajesh what he thought was contributing the kind of drop that we've seen, and he weighed in. But it's a pretty straightforward question that one of my viewers has. Vishakha, writing in from Bengaluru, is asking which quality stock would you buy today? And are we near a bottom? And I guess that's a very hard question to answer for anybody who has participated in the market, irrespective of how much time they've spent. But looking at the valuations, which I'm sure you have been looking at, and I know that we've spoken 2 months back and you've said that you're uncomfortable with the valuations in certain pockets. Is there any quality stock that you see right now that you would buy, that you're more comfortable buying at these levels compared with 2 months back? Even if it goes down another 5%, you'd be comfortable.
So I think, say a company like Nestle has dramatically changed. It's basically this quarter was a difficult quarter for them, and we've seen the stock correct from almost 2,800, 2,900 levels to the current levels. And I think from a fundamental perspective, valuations have got reasonably corrected to closer to the long-term averages. And if you look at the business of the company and what the management is doing about changing the current scenario, is that they're taking a lot more initiatives in terms of focusing a lot more on the advertising spend, the rural reach that is there. So I think it's just a matter of time before, again, their earnings continue to grow and we will see this stock again grow at that levels. So this is one company which one can look at adding even on declines at the current levels.
All right. So Nestle is the one pocket that looks positive to Lancelot in quality stock. Yeah. In this kind of selling pressure that we're seeing in the markets. Well, the next question is from Satya from Chennai, and he wants to understand overall from a healthcare sector perspective, as well as he wants to have a view on Zydus Life, and he wants to know how it will perform post US elections. He's bought Zydus at 1100 levels, and he's bought around 300 odd shares, and his current loss stands at around 29,000. This is more of a fundamental question, so I'll stick with you for this one. Zydus Life Sciences, your view on the particular stock?
So I think, the company has been doing reasonably well. The US markets have also started to open up, and you are seeing some demand coming in from the US. I think if one looks at it from a 2 to 3 year horizon, one should get reasonably good returns from this stock, as both sales and earnings will continue to grow going from here. I don't think US election results may make any significant impact on sales, because at the end of the day, both the candidates are committed to bringing down healthcare costs in the US, and one of the ways of bringing it down is obviously to look at companies like Zydus or the Indian pharma companies who can provide medicines at lower cost as compared to US companies. So I think from that perspective also, it shouldn't be too much of a negative, and one can look at accumulating this stock.
All right. It's an interesting question coming through from Arun, who's writing in from Hyderabad. It's a stock that we discussed at the start of the program, which is contributing the most perhaps to the declines even at this juncture for the Nifty 50. I'm talking about Reliance Industries. And it's given up quite a bit of ground over the last month or so in particular. And there are quite a few rumors that are circulating as to why this is being caused. But let's talk about fact. And let's talk about whether or not it should be bought at this current juncture. Because, Rajesh, if you look at the year-to-date chart, it is now currently just about negative. So would you say that it's now a good time to consider buying?
So for near-term, short-term perspective, stock structure is on the weaker side. We may see furthermore weakness in the near-term to short-term structure. But on the longer-term time frame, yes, it's an opportunity again to buy and accumulate in this decline. For trading point of view, I think 1250 would be the next target for the stock on the downside. Though stock is now approaching towards its critical support area, which is placed at around 1290. Almost stock is trading around those levels. So I think if it slips below to 1290, next target would be around 1250. But for long-term investor, yes, one can buy these dips for long-term investment perspective. On the downside, 1220 would be your stop loss for long-term. And on the higher side, the first resistance on the higher side, the major resistance is placed at around 1340, 1360 level. So that level needs to cross. Once the stock crosses those levels, then we may see some short covering action and some comfort buying may emerge in this counter, and then possible stock can start recovering from those levels towards 1400 to 1450 kind of level. But it may take time, as the stock near-term structure has already turned bearish.
Right. Well, the next question is from Vinod Kumar from Kanchipuram. He wants to invest in Dixon Technology. Now, what he said is that he's already invested in a few shares of Dixon Tech, but he wants to understand whether he should add more or not. Rajesh, I'll stick to you for this one. How does Dixon Tech look to you on the charts?
So overall long-term structure is bullish, and yes, we have seen some profit taking in recent past from the higher level. But stock is now trading near to its 50-day moving average, which is almost close to 13,900 kind of level. So I think if it's not breaks below to 13,900, I think we may add the position, as the stock has already corrected from its recent high of 15,000, 15,100 kind of level. So I think after a significant correction, it's an opportunity again for trading point of view, as well as for the short-term investment perspective also. So 13,600 would be your stop loss. Yes, he may add the position. On the higher side, 15,000 to 15,500 would be the next target once the stock start recovering from the current level.
Okay. Quick view on VRL. Logistics, the stock is currently trading at 554 thereabouts. We've got a question from Nadeem Khan, who's writing in from Noida. Lancelot, on the fundamentals, do you have a view, and would you hold at these levels?
Yes, I think one should hold at these levels because VRL Logistics is a major player in the road transport space and is providing end-to-end solutions for companies basically primarily out of South India and Western India. So I think given the growth that we are seeing in the road transportation space as well as in the e-commerce sector and in the general economy requiring increased road transportation for goods and services, I think one should remain invested in VRL. Maybe if you're getting it at this price, start accumulating slowly on the way down, because over the next year or two we should see a significant improvement in its revenues as well as earnings.
All right, Lancelot, on that note, thank you so much for joining in. Rajesh as well, thank you so much for joining in, for answering all the questions that you did answer. An insightful conversation today, particularly important on a day like today. Thank you so much. All right, we have to slip into a very quick break on this program, but don't go anywhere because we're trying to decode for you what is happening in the current context, why we're seeing so much selling, and we've got two voices from among the biggest dealing rooms in India to give you some perspective on whether or not certain action on the derivative side is leading to selling in the markets right now and why there's such a spike in the VIX. Do stay tuned. We'll be back on the other side with a lot more. Welcome back. You're watching Ask Profit on NDTV Profit. Now, we promised that we'd be delving a little deeper into what's happening with the markets right now. And who better to ask than individuals that are part of among the biggest dealing rooms in the country. We've got Deepak Jasani, Head of Retail Research at HDFC Securities, and Gaurav Dua, who's Head of Capital Market Strategy at Sharekhan by BNP Paribas. Gentlemen, thank you so much for joining in. A lot of our viewers are trying to understand what is happening at this juncture. And there are some explanations that are being floated, and perhaps a conversation with you will help them get some clarity. Deepak, I'll start with you. One of the points that is being raised is the possibility of margin calls being triggered, cash not being added by clients, and therefore securities being sold into. How plausible is that as an explanation?
Yeah, good afternoon. Now the Murat trading session of the last session, which we had, previous session, and that session ended with gains. So in that sense, margin calls this morning will typically depend on the MTM losses till yesterday. So whatever losses have been made on the Murat trading session or prior to that, for that the margin calls will be made today. But I don't think that was a very big amount in any case, because Murat trading ended in the positive. Today, there is a fall in the market. So probably tomorrow morning, margin calls may happen in case markets don't recover by the end of the day and clients are not able to top up their MTM losses.
Gaurav, I want to understand that what is the kind of client exposure right now in terms of derivatives, and how much of that allocation is towards the longs?
So, I think most of the clients are not over leveraged. That's what we have seen. System has become extremely tight. So it is not like past when markets will fall by 200, 400, 500 points and it will trigger a massive kind of, margin calls and, so I don't think we are in this, in this thing, then kind of this market where margin calls is a trigger for a sharp fall in the market. What we see is that, every year Nifty does go down by 8, 10%, 12%. And we have already, we had just had a fall of around 9.5 percentage points from the peak. So I think this is something which most of the investors will this thing take in stride. The problem is in the small cap, micro cap space, some of the overheated spaces where the fall has been much, the sharper. Stocks are down by 20, 25, 30% plus. And there you don't have margin funding. Okay, so I don't think margin funding or the squaring off is an issue as of now in the market. Yes, as the other participants said, tomorrow morning you might know the figures, and it is not. I don't see it as a very big issue unless the market keeps falling down like this for a couple of days, 2-3 days. Unless you see that, I don't see margins as an issue.
Fair point. Just help me understand further, Deepak, what the kind of behavior is that you're seeing with your clients right now. Because another kind of talking point has been that while we've seen the benchmarks drop, as Gaurav just pointed out, 9 percentage points odd for the benchmark Nifty 50, less so for the broader market benchmarks over that same period, we've seen a few stocks where you've seen sharper cracks. The point that is being raised is that positions are not being kept for long periods. Out of 10 positions, say for example, 2 are being kept, and so therefore this is not something that could exacerbate, and that lends itself to what Deepak is just talking about, or rather what Gaurav is just talking about. What would you tell us with regard to the behavior of your clients? Are they adding cash where required when margin calls are getting triggered?
So it will typically depend from client to client and their trade mix. So in case they are more sort of focused on derivatives or FNO, then probably at some point they will take a call that they have to get out, they have to square up and wait out for some time before they have a clearer view about the direction of the market. In case they are invested in the cash market, and most people will have money to sort of top up at times of weakness. So there also, I think people will continue with their cash positions. Very few will want to exit their profit making and loss making both positions, try and square up them and sort of sit out for some time. But most cases, people will top up their losses, pay up their MTM losses, and wait out for better times to come. Unless, as Gaurav mentioned, the market cap keeps falling day after day for the next 5, 7, 10 sessions, at which point the patience of the cash investors will also get tested.
Gaurav, you said that you might expect further fall in the markets. So, overall picture, I want to understand. First off, do you think that the markets are oversold? And secondly, when do you expect this selling to, overall take a pause or maybe take a stop, and thereafter we see a correction and we see some kind of positivity or some kind of green signals in the market going forward?
So yeah, I mean that's I don't have that kind of a skill to correctly predict the market for a day or half a day or 2 day. But then if you see in this fall, basically the large investors, institutions are going short. That means there's likely to be more weakness in the market. Retail, on the other hand, today in the F&O have actually built up their long. So that is how the market is as of now looking. So I think if you expect some more weakness, that could be the case. However, where it will take the support is something I think we'll know in the hindsight only. But given the past history, as I said, 10 to 12% kind of a pullback in the Nifty happens every year. So that should not be honestly surprise to anyone.
Gaurav, just to follow up to you, of course, you can't project or predict when things will turn. Nobody can do that, really. But the question to you is there some element of spooking taking place based on the kind of global events that are just a day or two away, particularly the uncertainty with regard to the US elections, particularly in the context of the kind of selling 1.25 lakh crore on a provisional basis by foreign institutions in the Indian equity market?
So you mean, I think we have been extremely lucky and blessed in this fall because there was so much of strong domestic inflows that 1.5 lakh crores have been got absorbed with only this 8 to 9% fall in Nifty. So I think markets have done this thing pretty well in that sense. Secondly, I think markets, if you look for a leading indicator where they're going to stabilize, one is that, as I said, the retail will have to stop building longs, which I don't see as of now. Secondly, the India VIX index is still in green. Okay, so volatility index is going up. Unless you see first signs of India VIX actually cooling down, you cannot expect markets to stabilize. Okay, so I think these will be two basically indicators for everyone to look forward to.
Right. Deepak, just for viewers' context, I want you to explain that why has the India VIX gone up so much, and what is the kind of trend that you expect going forward as well?
India VIX has gone up. I think it closed yesterday at about 16. It has remained in a band of about 12 to 16, 17 for quite some time. So in that sense, volatility, now currently it is at 17. So 12 to 17 is a normal band for the VIX. We are at the upper end of the band, no doubt. There is a event because of which the volatility is high, the US elections. and US Fed meet and the result season. There are three things put together. So it's not surprising that the VIX is inching up, but historically the VIX has gone up to much higher levels in the past. So compared to that, I think this is there's nothing to get overly worried about these levels of the VIX.
Fair point. Deepak, I'm just curious about the kind of selling that you're witnessing, whether it is concentrated in any specific pocket sector-wise, and in your opinion, are there any pockets that are poised for more selling where you anticipate that things could get worse?
So today, I think we have seen some weakness in the refining stocks because of a brokerage report which has sort of downgraded their rating on all the refining stocks. There is some selling in auto stocks, mainly because of the monthly sales number. Wholesale numbers have been good, but retail numbers, people are still awaiting as to how good or otherwise they have been. So from day to day, you will sort of get sectors which are under selling pressure or which are witnessing buying. Secondly, if there is a lot of FI selling happening, then typically it would be a basket selling in most cases, whereby about 15 to 20 or 30 stocks will see selling pressure at a particular point of time, and the index will come under pressure. So a lot will depend on the near-term developments in the respective sectors, and that is how those sectors will get impacted either on the positive or a negative side.
But Deepak, I want to understand that the selling has been happening since the past few days. Do you see any sectors which has stood strong against the kind of selling that has already been happening in the markets? And do you expect those sectors to probably perform better as compared to what other sectors are seeing in terms of pressure?
Yeah, so I think two sectors stand out. One is BFSI and the other is IT. So they have sort of fallen less than the others, withstood the overall negative sentiments much better. And going forward also, I think we had slight negative news for the banking sector in the sense that the credit growth for the fortnight ended 18th October came in at 11.5%, which is at a multi-month low. So that is a slight negative for the BFSI. Otherwise, I think BFSI and IT could sort of outperform even in a downtrending market for some time.
Gaurav, do you want to add to that? And also, question is, how are you advising clients right now? Of course, it would depend on size, scale, and proclivity. But broadly, how are you advising your clients?
So, for about month and a half, we've been asking our clients to reduce exposure to small cap, micro cap stocks, momentum stocks, because, you have had a 17, 18 months of a one-way rally in the small cap index. And if you see the past 20, 25 years, on an average, a small cap rally lasts for around 18 months. So we had already had that. And maximum of small cap rally has gone for around 20, 21 months. So it was time where the risk reward was much, much better in this thing large caps compared to small caps. And this thing that is quite evident. Also, we were asking our clients to take home some profits in the spaces that has been doing well, like power, defense, railways, and stuff like that, where the valuations have become extremely overheated. So that has been our stand for past 1.5 month, 2 months. Now, talking about the spaces which are doing well, which are not doing well, I think they are very, very closely linked to what happened in Q2 earnings. We've been talking about events, but we haven't talked about how the earning growth has slowed down. Started in this in Q1, and it is very, very evident again in this in Q2. So the biggest disappointment which has come here is that the consumer spending has slowed down. rural was supposed to pick up, which has actually not happened. Urban spending is also weak. So if you see, basically FMCG, autos have been largely underperformers. On the other hand, we have seen asset quality issues in case of NBFC. So that is also a space which have been the worst hit. So this is all linked to what have been the outcome of Q2 results. On the other hand, what we have seen is that some of these private banks, some of these these real estate companies, IT companies, which have shown decent numbers and given a better outlook of growth, have been the outperformers.
Right. Okay. And thanks for that summation. Deepak, last thoughts from your side. I've asked Gaurav already what he's been advising or his team has been advising clients. Do you want to add to that? What have you been telling your clients?
Yeah, so blind investing in micro, small, and mid-cap stocks to be typically avoided. That goes without saying. And but at the same time, one has to realize that small and mid caps will give you the best alpha. If you don't want to if you want to stay away from small and mid caps forever, then probably you should go to mutual funds, the large cap mutual funds or the index mutual funds. So you will have to be on the lookout for stories within the small and mid caps where the stocks have come to an attractive level vis-a-vis the growth expectation of their earnings, and take baby steps or do SIP investing in those stocks. Monitor them very closely, look out for any red flags continuously, and when you think that their valuations have gone beyond what the bull markets also deserve, then better to start unloading gradually from those stocks.
Deepak, Gaurav spoke about earnings. I'm curious about what you made of that, because there have been a few very key disappointments. In fact, if I look at the development today itself, and Gaurav did mention that in the auto pack, wholesale numbers are a bit of a disappointment in certain pockets, and that's evident in the way that the stocks are getting battered a little bit, right? So what did you make of the areas where you were most disappointed, and are there areas where you're seeing that it's a blind buy at this juncture based on the earnings that you've seen? They were better than you expected and valuations have corrected, and so it's a blind buy?
So earnings this time around, I think the profit growth will come at a multi-quarter, 16, 17 quarter low. So in that sense, there may not be any blind buys as such in terms of sectors. It is all very, very relative. Now, the commodity-based sectors have performed the worst, whether it is metals, oil and gas, cement, chemicals, etc. So they have performed the worst. So going forward, I think one will have to look at whether these commodity plays are reaching any attractive levels so that you can ride the bounce or maybe the next big run. And a lot will depend on how the Chinese economy starts behaving from now on, based on the stimulus measures which have already been announced and some of which are expected from here on.
I just want to point out very quickly that we are off the low point of the day, gentlemen. You're obviously looking at your screens as I am right now. We're down about 1.5% for the Nifty 50, as compared with 2% when we started this conversation, or thereabouts. Actually, at 11:30 or thereabouts, we're at 2% down.
Right. Yeah. I think, Alex, another pocket which is seeing significant pressure today is the oil and gas space, and it's down almost around 3.5 odd percent. But like markets are recovering. Even Nifty Oil and Gas has recovered from its day's lows and currently trading around 2.8% lower. But Gaurav, I want to understand overall a lot of things are not working for OMCs. Brent prices have been up around 4%. Q2 earnings have been weak for all of these OMCs. Production outlook overall remains uncertain. So your outlook on all of these OMCs, and how does one play with these stocks at present?
Right now in the oil and gas space, what we have been talking about, recommending to our clients, and what we like is the entire companies in this gas chains. Okay, right from this Petronet LNG to GAIL to this thing IGL, NGL. So I think there is a space which don't get constantly or regularly affected by the regulatory changes. So that's where we see this thing value. Valuations are also on our side. So that's where we've been focused. OMCs have become extremely volatile because of the volatility in the crude oil prices, and that makes it very, very tough to take a buy and hold call.
That's a fair point. Deepak, Gaurav, thank you so much for joining in, for the perspective that you gave us. Most insightful. And on a day like today, our viewers will certainly appreciate the time that you've spent with us.
My pleasure.
All right. Now, let's very quickly take you through what we have not spoken about while we were speaking to those two gentlemen. And the fact is that, and we were pointing it out very quickly, but let's take a little bit of a closer look at the patchwork right now that we were showing you on the screen in terms of sectoral performance. You'll see VIX is still elevated. It's up about 6% or thereabouts. But you have the Nifty IT that is currently, has come off. It's down about 1/3%. And that was what Deepak was just mentioning in terms of the stocks that have not gotten beaten out as much. BFSI not to that extent. It's still down, the Nifty Bank down about 1% or so. But you have oil and gas that is one of the pain points in trade today. And let's talk about OMCs as well as gas stocks. And this is also on the back of the commercial LPG cylinder price hike. That is also playing into the kind of reaction that you're seeing in the stock markets today. Mahima is joining in to tell you about the potential impact on the OMCs if this hike, or rather of this hike. Mahima, what can you tell us?
Good afternoon, Alex. So, you have the Nifty Oil and Gas down about 3.8% intraday. When you talk about the top losers, you have companies like IOCL, BPCL, HPCL, and Reliance Industries. And the Indian oil marketing companies have fallen over 4% intraday. Now, when you talk about what's not working for the OMCs, well, up first is the volatility in Brent prices. While they do stand lower on a one-year basis, they have seen almost a 4% uptick in the past week itself. And the OMCs also posted a weak Q2 earnings. They have extended LPG losses. Now, they did announce a commercial price hike by 62 rupees for the 19 kg cylinder. However, when you talk about, while this could offer some relief on the LPG losses that the companies have been facing, they have been facing majorly losses on the retail part of it, which is currently played on a subsidized race. The market's not, you can see while this would be positive for the realizations, the stocks have corrected. When you talk about what's not working for Oil India and ONGC, well, production outlook remains uncertain. The companies are yet to post their Q2 results. And lastly, when you look at the city gas company pack, well, IGL, MGL, GGL are all fallen 2 to 4% on an intraday basis. One of the major, headwinds for the sector is the lower APM gas allocation, which impacts their operating costs and thereby their profitability. Analysts also expect near-term margins to, remain under pressure, and the PNGRB notice to end network exclusivity is also a key overhang.
Yeah, thanks so much for putting that into perspective for us, Mahima. And certainly those stocks are among the worst hit, particularly in the large cap space, if you were to look at it. And some of those stocks will play on the screen. But one key aspect this week, apart from everything that you're seeing in the global space, talking about US elections and Fed meet and everything else, the action in the primary market in India is certainly something to watch for. And it's something that Mahima is tracking very closely. The Swiggy IPO, a lot of people have been speaking about it for so long, particularly because of the interest that celebrities have had over the last 3 or 4 months, people trying to get in early.
Right.
But that issue, the size of the issue has actually shrunk a couple of times. It is at 11,300 odd crore rupees, and it's a tough week for them to launch their issue.
Absolutely. It's a tough week, but the interesting part is that Zomato will now have a peer to compare with. So it's probably good for the entire quick commerce and the food delivery space overall. Just to give a brief about the IPO details, the Swiggy IPO will open for subscription on 6th of November and end on 8th of November. The issue price is set between 371 to 390. It has a fresh issue of 4,499 crores, and OFS stands at around 6,828 crores. So the total issue, as Alex rightly mentioned, stands at around 11,327 crores. Now the market value as per upper band stands around 87,299 crores. Now in terms of how these proceeds will be used by Swiggy management, well, they'll be repaying the Scootsie borrowings of around 164 crores. Further, they'll be expanding their dark stores and will be investing around 1,178 crores there. They will also be investing in technology by around 700 odd crores. And further, they'll be investing in branding and marketing and promotional spends of around 1,115 crores. Now, in terms of the financial metrics, when it comes to talking about the Swiggy IPO, it's but natural that we have to compare it, to Zomato.
But the sticking point, Mahima, is going to be the fact that they are not yet profitable. And it's going to take quite a bit for them to be profitable. And so therefore, will the street have the kind of patience that they would anticipate or hope that the street would have to wait for 5-6 quarters for a profitable turnaround?
Absolutely. So the analysts suggest that it's around 5 to 6 quarters away from being profitable. So that's one of the pain points for Swiggy right now. But the street might take it positively because it is coming at a lower valuation as compared to Zomato. So that's the plus point for the Swiggy IPO. In terms of financial metrics, as you rightly mentioned, it's around 4 to 6 quarters away from turning EBITDA positive. Currently in Q1, it had a negative EBITDA of around 544 crores. And overall, in terms of metrics also, if we see, they have been improving in terms of FY24 to Q1, even in terms of contribution margins. Swiggy's performance metrics have been improving. So that's a positive definitely for Swiggy IPO.
Let's see
because with the kind of swelling that we are seeing, it'll definitely be an interesting thing to watch out for.
And even at this juncture, despite the kind of drop in prices, Zomato is still one of the stocks of the year. So we'll have to see how Zomato also reacts once Swiggy comes through.
Absolutely.
But with that, we're completely out of time on this particular edition of Ask Profit from Mahima and myself and the team that put the show together. Thank you so much for watching. Do stay tuned. This is NDTV Profit.